This is Movers and Shakers, where we interview the upcoming generation of Make It Happen multifamily investors to share their story.
Welcome to the Movers and Shakers podcast. My name is Gino Barbaro, co-founder of Jake Gino, father, investor, coach, former chef, and I'm here with my brosif, Joshua Ryan Rusin. Josh, how you doing today?
Gino, doing well, man. Super excited about everything we got going. You know, I spoke at a conference yesterday. We got the upcoming Buy Right Bootcamp for some students to attend, and just making it happen, man. A lot of students are closing deals, quitting their jobs. And speaking of quitting their jobs, we got a student today who quit his job, you know, through the community. Gino, talk to me a little about what's going on and what you're excited about.
Well, I'm excited because I met David Dawkins about a year ago at a multifamily meetup. And I tell a lot of our students, if you're not going to multifamily meetups, you need to create a multifamily meetup. Start engaging with people. They're a lot of fun. There aren't really that many out there. I'm surprised. More meeting single families, but getting out there networking. And that's how I met David. I met David at one of these meetups. He kept going. He kept learning. He was on the cusp. And I think finally things clicked. He said multifamily is a great thing, great place. He lives in a great market. So I think from there, he just took it to the next level.
Love it. Speaking of David, a little bit about him. So he spent the previous 10 years of his professional career in corporate finances and sales. He started investing in real estate 3.5 years ago and grew his portfolio of small multi and single family rentals to over 2.5 million. From there, he transitioned to real estate full-time 4 months ago, now focusing on commercial multifamily, and has since closed on a 10-unit property and has an LOI accepted on a 29-unit deal. Wow.
Mr. Dawkins, welcome to the show.
Well, thanks, guys. I appreciate it. And thanks for having me. I'm excited to be here.
Well, why don't you tell the listeners a little bit about your background, how you got into real estate, your former career, and more importantly, what was the tipping point for you wanting to leave? And actually, you know, then we'll go dive into the next steps on how people out there can follow your footsteps.
Yeah, absolutely. For me, I mean, honestly, it was probably a pretty typical story. Like from the beginning, I graduated college, had student loan debt, had a couple different jobs, and then realized like I need to get with a company that had some upward mobility where I could really just grow and make some more money. Honestly, it really was my main focus. So I did that. I actually went back, got my MBA as well, tacked on a little more debt, but at least they paid for most of that. So it was all right, you know, the deal at the time. And then just kept progressing forward. I got a few promotions, and then, you know, really, I got really aggressive about paying down that student loan debt and just into personal finance. And so as I was making more and more money, and then I was paying that debt down, eventually I paid it off. And so that delta had just grown, and I just stayed, you know, living within my means for the most part. Didn't go crazy with each raise and promotion. And then I started looking into different investments, dabbled around in stocks a little bit, and then really kind of landed on real estate. And and things were going really well as far as my professional career. I was getting paid off the bottom line. I was making more and more money. But with the company too, I was going to have to move again. And that was part of it. You know, my now wife at the time, like she was from West Palm. I'm here we're in Jacksonville where we met. And really we decided, you know, didn't really want to have to do that. And I realized, you know, there's other people out there that are very successful, wealthy, that did not go that corporate, you know, typical corporate career where you're relocating multiple times. So I started looking everywhere and kind of ended up falling on real estate. And I realized too, I did some, you know, wholesaling and flipping, you know, very, very little at the very beginning, and kind of realized pretty quickly that rental real estate is where the wealth is really made. And then I knew early on, like I didn't really know anything about real estate, you know, prior, and I didn't know anything about multifamily specifically until probably I think I had 2 or 3 rentals at the time. And I remember I heard you and Jake on Bigger Pockets, and it was one of those. It was the first time, I think I'd heard one of their podcasts with Department Investors, but y'all were one of the first ones I heard that actually, you know, I didn't think about individuals just buying apartments. It was one thing for individuals to buy single family rentals, but then to buy apartments, it was just a totally another, you know, kind of mind shift for me.
Why? What was that block?
I just, you know, I didn't know what I didn't know. And then I just assumed in my mind, it was easy to, you know, and I knew at this point, I kind of knew and met a couple other investors, just more single family. So I didn't know anyone personally that and before that, I didn't realize that I just always thought it was more, companies and like REITs and funds that were buying apartment complexes. And I didn't really think about it in that space of, your mom and pop, like your small to medium sized apartments. And then it was actually when I started listening to your podcast, and you mentioned that you were moving down to St. Augustine. And I'm like, man, I'm in Jacksonville. Like, there's a guy right down the street from me that's actually doing this. And then, so I continued though at the time, because with working a full-time job too, I wasn't at the point to leave my career at that point. And so I kept doing single family and small multi because I could do it on my own, just on the side of my normal day-to-day job. But then, I knew that long term I was going to end up getting into multifamily for a number of reasons too, why I kind of preferred it, like the valuation method, you have a little more control, and a number of other factors too. But I knew it was kind of one of those at the time, 2 or 3 years ago, I knew single family, I was comfortable with that. And it was kind of, one in the hand, two in the bush. I was like, I can keep doing this and pick up momentum. And eventually though, it got to a point where my portfolio, it was getting large enough to where it was a lot to handle. And I felt comfortable. I was like, okay, I'm not quite there as far as covering my monthly expenses, but I'm getting really close. And I had basically a proof of concept with what I was doing. So I felt comfortable leaving. And then, but I decided when I did that, I was like, all right, I wanted to be in multifamily, so I'm going to focus on that. And I gave myself 3 months. I said, I'm going to for the next 3 months, I'm going to only look at multifamily, not any single family. And then, so I did. And then fortunately I knew that I was like, if I don't get anything after 3 months, I can always revert back to the single family, space where I'd been. But fortunately enough, I was able to get a deal under contract within a couple months and close on that property last month, and now have another one in the works.
So what factors got you to go to multifamily? What other factors other than, I guess, the valuation component of it?
Yeah, it was the evaluation, there's the economies of scale to it as well. And then I think, to be honest with you too, there was a little bit of it was the mortgages. Once you have so many residential mortgages and you can't get any more. So that was part of it. It was just a natural progression. But then as well, it was more the use of my time, because I will say the commercial properties, it's not exact. Like, there's more moving parts and you do spend more time, but it's not, closing on a 10 unit does not take 10 times as long as closing on a single family.
Mm-hmm.
So it's kind of not only the economies of scale, financially and with the properties as far as, one roof or 10 units, for example, but as well, just it's more of a better use of your time. So once you have the ability to put these deals together, why spend your time doing so many multi or single families when you could, I would rather do 3 or 4 solid multifamily deals a year as opposed to, say 20 single families. And that's really in the residential space, like that's where you really have to pick your volume up like that. It's just retail commercial, like any industry. If you're in the retail side of it, you need to have high volume. You're going to have, there's smaller transactions and you need more of them. Whereas opposed to commercial, you can achieve your same goals. Typically you can achieve your same financial goals of net worth, income, whatever they may be, but doing less deals, and just less deals is just more moving parts. But and it was too, I just I think my skill set, my, background with financials, it just kind of translated very easily to multifamily, and I enjoyed a little more too. It's a little more of a, professional. There's more of a professionalism to commercial real estate than necessarily with a single family investing.
Mm-hmm.
So really a number of factors is why I just, kind of continued to trend that way.
So before we get into the benefits of joining the Jake and Gino community and how the community helped you, I want to get into the framework. I'm going to mention a few things that you said. I want to give all the listeners a framework on how to get out of their corporate job, their rat race, and become quote unquote financially free if they want to get into multifamily. I think the first thing that everyone has to understand is what David did was he assessed his personal finances, killing the personal debt. I've said it so many times. I don't know if people have heard me say, maybe I think it too much. I think personal debt today is the new form of slavery. I think when you have a lot of personal debt, whether it's student debt, credit card debt, mortgage debt, car debt, whatever the debt is, it really saps away your ability to take risk. It really saps away your ability to save money, to invest that money. And that's what it does. And the worst part about it is it makes you have to go to work, to a crappy job to pay the bills, which is the worst thing, because how you feel is how you show up in life. So if you're going to a job that you hate to pay off bills that you can't stand, how do you think you're going to progress throughout the week? So I think the first step is to do an assessment, to do what Dave Ramsey says, is to do a budget, figure out where your money is flowing in and flowing out. The second thing about that budget is don't only just figure about saving 15 or 17% of your expenses, which is what you'll do when you create a budget. Look at your top line. Where else can you create revenue on the top line? For me, I had started out with that one investment with Jake, the 25 unit. Quickly thereafter, I created another stream of revenue. I had another skill set. I started doing cooking videos. I started doing physical products with a company called Gino's Family. We started a podcast. We wrote a book. Other forms of revenue, maybe going on more sales calls, whatever that is. Don't focus on just expenses. Focus on income. I think the next thing that David did was he really cut down a lot of those expenses and lived well within his means. And every time he got a raise, he didn't go out and buy a Lexus. He didn't go out and buy a Porsche. What he did was he saved that money and he put that money to the side. The next thing he did was he didn't just let that money sit in a savings account and rot, earning 1 or 2%. He went out and he educated himself on other investment vehicles. It doesn't have to be multifamily real estate, although it's probably one of the better vehicles out there right now, because with the tax benefits, with depreciation, with the principal pay down, blah, going on and on, there's other investments out there. Pick one, start investing in that. And if you don't know it, it's the education and then the action, which will get you your results. So there's the framework, really simply, laid out. Assess your personal debt, start paying off that personal debt, start putting money away to save, start taking control of your expenses, start looking at, where your money's flowing in, where your money's flowing out. Start learning alternative investments. And I'm not talking about putting money in a mutual fund, because that's not investing. That's just giving your money to somebody. Really take control of your financial future. Take control of where your money's flowing in and out. And, David, how old are you right now? We didn't even mention that.
Yeah, I'm 33.
So David's not a 58-year-old. He's done this at a very, very young age, because he realized that, I want to take control of my financial future. I want to take control of the fact that I don't want to. And that's the thing. David liked his job, but maybe he didn't like to continue to move. He didn't like that stability. So that was his pain, his motivation to move away from that pain and to get, I guess, control of his life. So you want to add anything to that financial freedom framework?
No, I think that's pretty spot on. And no, I agree. And that's really, like you said, when my income, because it's a first step too, you need to understand your expenses and where they're going. But like you said, you can't save your way to wealth. You then need to focus on your income. And I was in a good job where fortunately my income from my job continued to rise. But then as I was picking up these other investments, they were spinning off cash that I was just reinvesting. So it was just snowballing and it was able to grow very fast. So no, I think that's pretty spot on as far as how, and then when you're going through it too, as far as, with me and you do, and it was a great job, but honestly, there was parts I just was a little unhappy, because I wanted more control. I was actually having this conversation yesterday. If you had looked, most people would have said, dude, your position, like what you got going on, it checks off like 8 out of 10 boxes. And that's how I felt for a couple of years. I'm like, man, am I stupid for even thinking about, like, maybe I should just stay here. But then I realized that I was like, no, you can have, I want more, and I want just control. I wanted that day-to-day control, and it didn't, the more money for me to pick up and move and now pick up my wife and, our future kids and move around, that wasn't worth additional, income to me. It wasn't worth additional money. And so I think you just really need to, be clear on your goals and what's going to make you happy, and then find out a way to get there.
So there's two things I want to mention. I've been listening to Jim Rome again. He says a couple of things which are very enlightening. It's easy to do it, and it's easy not to do it, right? It's not really hard. We're not talking about rocket science here, but you need to create those really amazing habits to do it. The problem is most people can go to water. They just don't start drinking. You have to realize what's going to make you want to drink that water. For David, it was not moving across country. Those 8 out of 10 boxes are great, but those 2 boxes were more painful than those 8 boxes, which is really cool. And it's the same thing with me at the restaurant. I always talk about how miserable it was. It actually wasn't that bad. Probably 7 boxes were chopped off. 3 of those were really painful and sucked. So that's what really motivated me, right? Yeah. So, and the other thing that Jim Rome says, he says the essence of life is to try as hard as possible to whatever you're doing, right? And we're the only probably creature on this planet that doesn't work as hard as we put ourselves into. A tree doesn't sit there from an acorn and go, I'm not going to grow as tall as possible. They're going to put all their energy and their effort into it. And a lot of us shortchange ourselves because we like the status quo. We say, well, he can't do it. You know, I can do it. I can't, but he can do it. Everyone out there, David did it. He's only 33 years old. The difference between David and a lot of people out there, he got clarity on what he wanted. He had enough pain in his life. He set proper goals, and he found mentors and people around that were doing what he wanted to do. And he went out and he actually took action. That segues me into perfectly. Once you joined the Jake and Gino community, what were the things that really helped you out with the community get clear? Was it the education, the community? What was it?
Yeah, I would say it was more the, surrounding yourself with other like-minded individuals that are doing what you want to do. For me, I mean, the education, because I had a good general real estate education, and even for multifamily, I understood the concepts. I think from an education standpoint, the benefit you'll get is being around other active investors. There's a lot more of I'll say like a current events education. So like you can read a book and you can get concepts, but the book that was written 2 years ago isn't going to say how when rates drop or rise, how it affects prices today. So you can, being involved, like in asking other investors, you can kind of see more of what's going on today. But in general, just I kind of thought about the way I translated in my mind was just that, like I was joining a trade association. So just like any other industry, they have trade associations where if you're a general contractor or a builder, like you're going to be involved in these other associations and network with the other professionals in your space. So I kind of looked at it the same way. So there's a lot of just, and it's just motivating too, knowing because you're not alone. Like when you're in single family, there are, like you mentioned earlier, there's a lot of RIAs. There are a lot of people doing single family investment, and it's hard enough to even find the real professionals that are doing that. But then when you go to multifamily, that world gets even smaller. And so in each market, there's going to be less and less people. But now, and this is what's great about technology. I mean, we can hop on this call, you got all, Facebook or whatever, but you can connect with investors and, in Tennessee, Atlanta, and other markets and see what they're doing. And it just helps you identify more as a true multifamily investor, which then will help you, with your conversations with investors and brokers, et cetera, because you're really treating it like a profession. And that's how I kind of look at it. It's my job now. So I'm part of an association that, surrounded by other professionals going in the same direction.
There's a couple other things I think that David pulled out of the academy. He's starting a podcast. That's something I think that it's difficult when you're on your own. When you're on your own island and you're saying, hey, should I start a podcast? Well, you know what? Picks up the phone, calls Josh, calls me and says, hey, what about a podcast? How do I start it? What are my next steps? When you're on an island all by yourself, it's really hard. There's no accountability piece there. That's one of the things that I found where most students, like I said, they go to the water, but they can't drink because there's no one there looking over their shoulder, putting pressure on them, holding them accountable. Hey, you know what? That water tastes good. I guarantee if you take a sip of that water, you're going to progress. I think the other thing is the networking. I mean, how much have we seen each other over the last 6 months? We've gone to meetups. I mean, my brother put a meetup on this week, Tuesday. There were 40 people there. You spoke in front of that meetup. I mean, that networking ability, when you're on an island all by yourself, people take that for granted. And that's an accountability piece. You've got to get ready for that meetup. You've created a meetup at meetup.com. You have one every Tuesday, last Tuesday of the month, going to that meetup, speaking in front of those people. So it's amazing the things that we don't think of. We just think of, hey, it's just some education videos, some trainings, but there's so much more to that. Could you want to speak to the networking and the accountability piece also?
Yeah, absolutely. I think that, it gives you an opportunity. It's very easy to network. There's going to be events that you're going to see and get invited to. So you're not out there searching for, randomly for the next event in your town. But then on the accountability piece too, I mean, even just knowing that you're going to see some, people again, you're having these conversations, there's this kind of a natural, well, when you see them again, they're going to say, what have you been up to? You don't want to say, well, I haven't done anything the last 3 months. I've been sitting at home staring, on Facebook for hours. Like there's just a little bit more of a natural, motivation. And when you see other people that are doing what you do, I think there's a natural, I don't even want to say call it like competitiveness, or just there's just a natural to go like, well, if they can do it, like I can do it. I think it just helps you. It kind of, even if there's someone, which you can get involved in accountability groups and have people more directly like follow up and have more structure, hold you accountable. But just in general, knowing that you're going to, see people again, you see other people being successful and doing, it kind of forces you and leads you to take action, towards in the right direction where you want to go with your goals.
Love that. I definitely think that the rising tide raises all ships. And I think it sums up generally in what you said there. So I like that.
So David, let's jump into that deal, the 10 unit. How did you find the deal? What did you like about it? How did you close the deal? Any value adds on the deal?
Yeah. So first off, this deal, it was honestly, I was lucky because it was really mismarketed. It was put on, so it was a residential agent that actually had it, and it was on the MLS, and it was originally, the way they had it priced, this was one of those things I've told people, like, if I wasn't doing this full time, I probably wouldn't have got this property, just because I would have seen it months ago and I would have said, oh, they're asking too much. I would have ran my numbers and just moved on. But instead, and this is where it comes, this is, you also pick up some tips and tactics too, like Bill, obviously, Bill Ham, he talks about your broker relationships, and whether it's a good deal or not, like, still talk to the broker, go tour the property. And so I reached out to her, and anyway, after a couple of conversations with the broker, it was clear she agreed with me and my valuation. She's like, no, I know they're asking way too much. And so I just said, I was like, hey, would it help you if I submitted an offer, just to kind of talk some sense into the seller? And she was like, sure, I'd appreciate that. So I didn't hear anything back, and then just kept following up. And then there's probably, I'd say a month later, because I followed up a couple times, and basically I was like, hey, are they, anything from the seller? And they were willing to come down some, but we were still off by, I want to say it was about $75,000. And I talked to the commercial lender at the credit union that was offering, they had this promotion, they're offering the best financing or the best terms I had seen from any regional or regional bank or credit union. And so I reran my numbers, and I pretty much put it back to her. I said, hey, here's where I can come up to. And they didn't realize, I was looking at, with the debt coverage ratio, I was like, honestly, no one's going to be able to pay what you're asking. Like, at that price, unless they're paying cash or, a large down payment, the numbers aren't going to work. And I don't think she realized that. I don't think the sellers realized that. So when they got that response, they basically came back and were like, hey, this guy seems serious. Like, I'm, sure. Like, and so they agreed to my price. And so then the financing way, like I said, I went through a credit union. It was a local credit union here that covers the North Florida area. And then as far as the value add, the great thing about it, the property was built in '87. So it was a newer property. The roofs had actually been replaced 3 years ago. So generally it's mainly, there's some loss to lease. There's some area to bring the just rents up to market just as is. And then we have an interior renovation plan. So as the tenants move out, we're going to upgrade each unit, bring the rents up even higher. And there was, fortunately, exterior wise, it was a brick building too. So there was very little, but we've already done that, put some new signage and trimmed some trees and done some minor, exterior work. But mainly the value add is just to do the interior renovations and bring the rents up higher.
So this is awesome, everybody. He used our master coach, Bill Ham, and that's another accountability piece, bouncing some ideas off. There's a couple really golden nuggets in what David just said about his deal right there. The first one is, don't be afraid to put a lowball offer in when it's not a lowball offer. Be able to educate the broker and the seller. The negotiation tactic that he uses, basically, from what I'm hearing, is, hey, people, what is it going to take for us to close this deal? We're not working against each other. Let's work together. And, obviously you don't want to insult somebody, but if you're talking debt coverage ratio, they don't even know what that means. You've got the upper hand, because all of a sudden you've shown your authority. I want everyone on this call who's hearing this, pick up the book by Robert Cialdini. It's called Influence. That is one of the weapons of influence, is authority and social proof. Your authority that you knew how to run that property, how that broker actually said to you, yeah, you know what? You're right. Your valuation is right. The broker's on your side right now. So I don't even know if people pick that up. That is huge. So if you have a broker on your side and you're giving them information and you're showing your authority and your knowledge and your experience, all of a sudden you're posturing yourself and you're positioning yourself as the authority. She's gonna be more likely to work with you and work against the person she's representing, because basically brokers just want to sell the property. That's what their goal is, to get the highest price. And if a property is priced too high, sometimes they know that, but there's no way for them to come to the seller and say, hey, Mr. Seller, can we drop the price a little bit? And sometimes sellers are reticent. They've got that number in their head. Josh is in my neighborhood right now, going to a house. He went to an open house with my kids, because that's what my kids like to do. My kids love real estate. So I'm going to open houses. So this gentleman has had this house on the market for 3 years. He's a builder. He had it on for $1.7 million. He's dropped it to $1.5 million. He's not going anything less than $1.5 million. His unrealistic expectations, if he had somebody who could work with him and say, hey, listen, this is why you're not going to get more than that, and being able to show that and show your authority and say your house abuts A1A, there's a lot of noise, it's a beautiful house, but you have to be able to show that authority. So it's important that you do that. And he doesn't want to work with a real estate broker because he thinks that most brokers, they know the price. There's no number in 1.5 that anyone's going to buy the property. So that was really important. I think the other thing was when you run your numbers, looking for the value adds, looking for the 1987 build in this type of the market cycle is great, because you don't want to buy a property that's really old, especially in Florida, that has a lot of deferred maintenance. In this type of the market cycle, it's a lot of risk, because let's say the market trends down and David does his whole package of, cabinets and granite and spends a lot of money per door. All of a sudden he's on a downward slope. There's a little risk in that involved. So the fact that the roofs were done, 87 brick build, 10 units, all in one location, those are all exciting features. Do you want to add anything else to that I might have missed?
Yeah, no, I think, in general, you pretty much covered it. And it's a good area too. So it's actually a little pocket. Well, and I say good area, it's not necessarily as far as class A or anything, it's still a class C area, but it's a pocket of apartments in more of a residential, area. And a couple of the other buildings too, because I had seen these in another one, a 28 unit I had actually submitted an offer on, that had traded recently, and were in the process. The largest complex in the area had actually already been renovated. That had got bought it was a year to 2 years ago. So it was kind of the whole area was going through this regentrification, process, if you will. And basically I was just kind of riding that wave of it too. There's still one more property right across the street actually that's for sale. And once it's bought and improved, then pretty much the whole area will be a lot nicer than it was 2 or 3 years ago, which hopefully will just continue to, increase the rents.
David, one other thing before we take a break for our sponsors, that's really important out there, everybody. Don't assume all brokers, especially multifamily brokers, know how to value a property. She put it on the residential MLS, and the thing that David, his mind, that reticular activating device in his mind went off, because he was actually looking for the opportunity. He was focused on it. And like he said, maybe 2 months ago, working full-time at his job, he probably would not have seen this deal. But since he's focusing full-time, is focusing his energy on one market, which is really important. The other thing is David really knows his market, which is another important thing. You can see that he can speak to the broker about the gentrification, about what the valuations are of the 28 unit. That's all important stuff that you're going to learn throughout your education working through it. So that's all really crystal clear and important stuff. Don't ever assume that brokers know valuations. Don't be afraid to show your brokers your underwriting and say, you know what, I think we're a little bit off on the numbers. What do you think? If this is a 6 cap market, why is the property being priced at a 5 cap market? They can go, well, that's why my number is that price, because, what can we do to get to that price point, basically? So those are all really key tips. Josh, you want to jump in?
No, that was good. I think the one thing that still stood out to me is when you talked to the broker, you said, can I help you by putting in an offer? So you all of a sudden made it friendly, like, look, I'm on your side, right? And teamed up with her. That was really, really awesome. So that stood out to me a lot.
I love
it. Yeah. And the reason why I did that was more just for I didn't expect to close on this deal. I just, in case she had another one down the road, that was more the real reason why I did it. I didn't think they would eventually come back and agree to my price, but they did. So it worked out. I was just thinking though, but long-term, and that's where, now just same thing as I go tour properties that I don't think are going to really work out, but I just hope that I build that relationship and then the broker has another one in a few months. So.
That's awesome. Let's take a quick break to hear from our sponsors.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created. Buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply.
Okay, Dave, we got some short answer questions here for you. So what is your favorite book you've ever read and why?
Man, that's a tough question. Like I'm kind of one of those, my favorite book's probably the one that I'm reading right now, which I'm actually reading this really interesting book. It's called The Fish That Ate the Whale. And it's a story of Sam Zamuri. He's the guy, he ended up, he came as an immigrant and he became the banana king, and he took over, he ended up buying a United Fruit, which was basically like the Standard Oil, like Rockefeller Standard Oil at the time of the fruit industry. So that's, and I kind of am at the point now where I read a lot of the more like business autobiographies. So like Shoe Dog was another good one. But if I was starting out, my favorite books that I always recommend though are Millionaire Real Estate Investor by Gary Keller, because I feel like it gives you a little more nuts and bolts. Once you've read, Rich Dad Poor Dad and stuff, you can kind of progress to that. And then and Brian Murray's Crushing It for specifically for apartments and multifamily. I think that's a great book to start out with.
Love it. What about your best habit for success?
That I would say too, I've tried a lot of different, morning routines and habits and stuff, and kind of what works for me that I've found. And what I do is just, I get up, I work out, and then I write down 3 things that I'm grateful for every day. And since I started doing that, it really has shifted I think I'm a much more positive person. But then I just visualize my day. I look at my day and then compare it to my goals to make sure that what I'm doing today is kind of going towards my annual goals. And then on top of that, and the reason I do that, because at the end of each day, I write out my next day. So I schedule out my next day at the end of each day. And it allows me, one, so I'm kind of more relaxed in the evening. Like I'm not still worried about what do I got to do. But then 2, so as I go through the day, I cross everything off. And if there is anything left over, it gets moved to the next day. And then, so I make sure everything gets done. And one practice when you start doing that, you'll never if you write something down like 3 days in a row, eventually by that 3rd day, you're like, no, I'm doing it right now. Like I'm not going to write this down again. So it just forces me to stay productive and get everything done. So those are just a few of the habits that I use that have worked for me.
That's really important. I love to recommend the book Atomic Habits by James Clear for goal setting. And what David is talking about is fall in love with the process and system of achieving your goal. Don't fall in love with the goal itself. The goal is to become financially free. Well, what are you doing to become financially free? You're getting up early. You're working out. You're writing 3 things that you're grateful for. You're writing your day out. You're scheduling your day out. Those are things that are not sexy, but they're moving the needle, and you're getting stuff done. One of our students, a big shout out to Alvin, Mr. Garlitos, fall in love with your actions. Don't fall in love with your results. I can see that David loves his actions. He doesn't care if he's going to get another deal the next 6 months. All those actions that he's taking are going to result in getting a deal, hitting part of his goal. So fall in love with those mundane actions, whatever works for you. I'm not a morning person. I can't get up at 5 a.m. because I go to bed too late. Everyone says, get up in the morning. If that's not for you, find out what works for you. Find out what your comfort zone is. Find out what's going to push you to take it to the next level, and fall in love with those actions, just the daily actions you take. And ultimately those actions are going to lead to your results.
Yeah, I agree.
Love that. Gino, there's been a lot of golden nuggets on this episode. Why don't you share some with the listeners?
Josh, I want you to go first.
All right. So the power of surrounding yourself with the like-minded individuals. What I've learned is when you're doing that, it becomes easier, right? When they're doing what you're doing rather than working against you, saying, why are you doing this? You're crazy. Real estate's risky. That was a really big one for me. And then also the power of creating a network and marketing yourself. So a podcast, a meetup, joining a community of like-minded individuals. Gino, what ones do you have to add to that?
Well, we didn't even mention David, part of his success in getting out was doing cost segregation studies on his properties, being able to say, hey, Gino, I never thought of that. Do you have somebody? That network and that Rolodex of people that we have in our community that we give to our students, it's huge, because that one thing that you don't know can really hold you back. And that one little golden nugget you can learn from a mentor, from somebody who's in the business, is really huge. You want to speak on that real quick?
Yeah, that's what I was going to say. Like, we could really talk for a while on cost segregation, but in a nutshell, like, not only did I have, income from my existing portfolio, and I saved up a lot of money, but then when I learned, and I knew about cost segregation, but then when I had the call with a CPA and he really walked me through my situation and how I could use it, basically, long story short, I'm going to get a very large tax refund in a couple months or in a few months. So basically the runway I thought I had just got extended twice as far. So it's huge. And that's something, you really need to understand that. And if you time it right, and if, depending on, obviously each case is going to be different, you can talk to your CPA, but basically you may be able to leave your job, you know, a little sooner than you think, you know, utilizing cost segregation, some other tools that you may be in a better situation than you realize.
And that's powerful. Not knowing that, being on an island all by yourself, maybe watching a video on cost segregation, you don't understand. But if you don't have the right professionals, you don't have the right team. I mean, Jake did the same thing. So, you know, David probably had heard Jake's story. Jake went through it and he left his job early because we bought our third deal through cost segregation. So something like that, to me, it's priceless. To me, it's something where you're reclaiming a year, 2 years of your time. And all of a sudden, with that year you have, you're going to more meetups. You're focusing on your market. You're focusing on speaking to brokers. So that to me is priceless. So I could go on and on about it because, you know, what David's done in the last 6 months is pretty awesome. He's going to come out with his podcast. How can the listeners get a hold of you?
Yeah. So if they want to reach out directly to me, they can just email me at david@sevenbridgesrei.com. And that's just spelled out. So SEVEN bridgesrei.com. And then you can also, the podcast, which we just launched, you know, a couple of weeks ago. And actually your interview just came out today. So
did it really?
We'll have to send that out, but you can look that up. It's the Professional Investor. So you can look that up on your iTunes or Spotify.
Was that a long podcast? Cause I remember we're speaking for a while and we went into depth. So you know, for all the listeners out there, honestly, for the first or second episode, David did an amazing job with the interview. It was great, really polished. So I think everyone should go out and check his podcast out because it was a really great format. I loved it.
Yeah, no, I appreciate that. And it did. I think that was the longest interview we've had yet, but it was great. We covered so many topics. And like we said then, I mean, we really could have kept going for hours, and we'll have to have you back and cover those topics.
Well, that's the thing, right? Now that you love what you're doing, your sole purpose is found. You can talk about what you love, and that's how people can understand.
Right.
If you love what you're doing, it's not work. It's just like you're just sharing knowledge, sharing information, sharing stories, and trying to inspire others to do what you love to do, correct?
No, 100%. And that's one thing I've realized too, as I'm having conversations just with, you know, friends that are asking more like, well, what does your day look like now? And I kind of explain to them, or when I'm talking to potential investors too, they can just tell. They're like, man, you really like this, don't you? And I'm like, I do. And then they're like, man, you spend a lot of time on this. Like, and I just explained, you know, the books and everything, the resources that I dive into. But to your point, like, I enjoy that. So it doesn't, you know, really feel like work to me. I mean, I treat it as, you know, professionally, but at the same time, it's, you know, I enjoy it. So
that's awesome.
I could talk about it all day.
Love it. Well, David, I want to thank you for being an amazing guest on the show and sharing your movers and shakers story. Now, guys, if you want to be the next movers and shakers guest, email me, josh@jakeandgino.com. And if you like the show, please leave us a review. And until next time, let's make it a movers and shakers week. See ya, everybody.
Thanks, David.
Awesome. Thanks, guys. Appreciate it.